Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like you see here with our 22 SPY and ES mean reversion systems, and of course our very awesome KISS trend following systems. Absolutely nothing out there like it. Anyway guys, let's get started here. It's the weekend. This is going to be a very comprehensive weekend newsletter, State of the Market technical analysis for September 24th, 2023. It's Sunday afternoon. All right. So this is our back end recorder for our standard web page, which I'm going to go ahead and get started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone has enjoyed their weekend so far. It's Sunday afternoon, about 4:30 Eastern Standard Time, and this is the very comprehensive state of the market technical analysis review of the markets, and it's September 24th, 2023. The last YouTube video I did was last Wednesday, and a lot's changed since, obviously, so I'm going to give you an update. As you can see, this newsletter is divided into 7 major sections. And by the way, if you happen to be new to our videos and of course the website, these weekend newsletters tend to be quite comprehensive, sometimes 100 charts, 40 minutes to an hour. These videos, I don't make them 10-15 minutes to get the most YouTube views. They're meant to be comprehensive, look at everything in detail. It's for technical analysis nerds like a lot of us, but we have some amazing stuff here, so hopefully you're not one of the short attention span folks who only want a 10-minute YouTube video. All right, can't hold your attention longer than that. This is not TikTok, so unfortunately TikTok has made given everyone even shorter attention spans. But anyway, newsletter is divided into 7 major sections, same general theme as we always, our opening discussion, market comments. We're going to do a deep dive on our mechanical systems, both our mean reversion and our KISS trend following. Then we'll do our top-down approach on the major indexes. We'll look at some custom key indicators. We'll look at some market sectors. We'll look at the dollar, commodities, precious metals, and of course, I'm just going to follow up on some trade ideas, but I didn't offer any new ones this week. Okay. That said, regarding the market, our comments last spring that we made a prediction that the market would hold up and rally throughout the summer into late July, and then it would experience a correction in August and September per seasonality, and that's exactly what has unfolded, as you know. Okay. Currently, on the markets, as you know, we were also focused on those coil patterns on the indexes, and they all broke to the downside last week. Did any of you act on those? The options we were discussing were one, either a shallow pullback wave 4 consolidation. That's the one I least favored. The other one that I favored more was a standard fourth wave zigzag, deeper pullback to the low 4300s, which we've already achieved, or even to the mid 4200s. That's the one I've been favoring. But the other option is that we put a major top in place in late July. Okay. And, if the market, for example, if the S&P falls, say, much below that June gap, there's a gap of recognition there for 42.20 on the cash, then the bull option will be really, not negated, but really in jeopardy. So the bulls really need that area to hold. Again, guys, like I said, the thing that bothers us with the market longer term, is the unfathomable, the backdrop, fundamental backdrop, the unfathomable amount of debt. We're over 33 trillion now in debt. Interest rates are now 5.5%. Mortgage rates are about 8% now. Also, the market is not cheap by valuations, PE ratios. They are very high, right? This has also been the narrowest rally we've seen in our lifetimes. So it's also possible that, like I said, we put in a major high in July. That said, make sure you have an exit strategy that fits your risk tolerance. Okay. Always have an exit strategy, unless you're just a buy and hold and never look at it, which if that's the case, why There's no reason for you to look at our analysis. We try to time the markets, do better than just buy and hold. But the daily KISS systems for the indexes, they've been flat. SPY, Qs, etc. Smart trailing stops were hit, and most of the big cap tech stocks that have led the market are also flat, such as Apple and Google, a lot of these, Meta. So, be aware of that. If you're following those, then you would be out in cash. Or if you're following our weekly KISS system, which has a little wider stop at 42.50, that's your other level. The point is, have some sort of exit strategy in place. Okay? Don't just listen to CNBC and Kramer and think the market's is going to rally to new highs easily and things are hunky-dory. That said, the market is quite oversold here in the short term. So unless we get some news out of the crazy news, I do think we can get a oversold rally early this week. That said, does that rally sold again, which is possible? Okay. The areas of big support I'm looking at are right where we are, around the low 4300s, all the way down to 42.50 or so. Okay. The thing the market really needs, also just from a catalyst perspective, is the US dollar to pull back, as well as the 10-year treasury yield. Mean reversion systems, while most of the KISS systems are out and in cash, the mean reversion systems have been scaling in. Out of the 22 mean reversion systems we use for SPY and ES, 2 of the systems have second entries, the trend pullback and the QEBTS. Again, that's the nature of those mean reversion systems. They scale into sell-offs. They buy when it feels bad. That's their nature. If the market needs to go lower, then they may need to take additional entries, or some other subsystems could trigger. The key events for this week: Tuesday, we have various housing data. On Tuesday, Case-Shiller, home index, new home sales. The big one, quite honestly, guys, is on Wednesday. Obviously you have durable goods and everything, but right at the close, 4 p.m. Eastern, Powell speaks. That's going to be huge. So when the market closes on Wednesday, don't just head off and go to the gym and play golf. You might want to pay attention to that. That's going to be a big catalyst. Thursday, of course, we have GDP, initial jobless claims, more home sales. Friday, ADV, inventories, personal spending. Chicago PMI. Next, item number 2 shows the index sector table, what transpired last week and on Friday. Market was generally down on Friday, as you can see. For the week, nice losses. The Dow was down the least. Again, it's only 30 stocks, down 1.9%. S&P lost almost 3%. NASDAQ lost about 3.3 to 3.6%. The Russell, which has been super weak, down 3.8%. All 21 sectors here that we follow were down. So broad-based sell-off last week. The largest down was consumer discretionary, XLY, down 6.2%. Banks down 4.6%, appears to be the next largest one. So even energy was down. XLE down 2.25%. Same for oil services, 3.25%. US dollar, again, still remains strong, up 0.37%. We need to see a sell-off in the dollar or pullback to help the market. Crypto was kind of mixed, but mostly down. Commodities, mixed bag here. The index itself, DBC, was down 1%. Crude oil was essentially flat. Big drop in gasoline. Good to see that. Natural gas, big pop, up 8.89%. Copper down 2.75%. Agriculture 2.15%. Wheat down. Coffee down. Precious metals, gold and silver are up. But the standout here, guys, is the stocks. The stocks need to lead versus gold that was slightly up, and silver up 2.25%. That's not a good sign there. If the market does sell off further this week, I wouldn't be surprised to see GDX sell off further as well. And as far as the bond market, 10-year, 30-year had strong rallies last week, taking out their recent highs. Next, item number 3 shows the economic news calendar, which I already covered in the opening comments. Again, if you need to see this, you can pause the video or open the standard newsletter format. And let's go ahead and jump to the start of the newsletter here. So before we go into the general market analysis, let's talk about the systems. So first off, the mean reversion systems, as I stated, have started to scale into the market. Okay. The two subsystems have triggered long. The SPY trend, the trend pullback, and the QE BTS. QE means quantitative edge, if you're curious about that. But two subsystems out of 22 are in second entries. So you can see SPY up here, the various strategies, and at the bottom is ES or MES futures. Again, that's the nature of these mean reversion systems if you're following them. And should the market go lower, it's possible we could see a third entry perhaps on these or another subsystem trigger. Again, that's the nature of these. They'll buy when it doesn't feel good. They'll take some heat, but generally they work out 90% of the time. They're opposite of trend following systems like the KISS systems that have a traditional stop that moves up. Next, image number 5. Here's some of the statistics for these systems. So here's the QE BTS, one of them. On SPY, you can see a profit factor of 21.5. That's excellent. Profit factor of 2 and 3 is really good on a system. Almost 89% winning trades, 146 total trades, going back to essentially 1995. And on ES, similar stats as well. A little bit better, 90.79% winning trades, less total trades. Next. Moving on to the KISS trend following systems, which again are opposite of the mean reversion systems. So first off, here's the weekly KISS systems. These give wide smart trailing stops on the S&P and triple Qs. The weeklies have not been hit. On the S&P, it's roughly 4250. You can see on the smart trailing stop, the weekly system went long way back in early January. Heck of an entry there, right? The weeklies have a wider stop, obviously, than the dailies. The systems did very good about staying in cash last year during that bear market. In the triple Qs, weekly 345 is the current smart trailing stop. Again, if that's what you're following, then stick to it. If you're following the daily KISS systems, well, you'd have been out already. Again, just make sure to have some sort of plan and stick to it. Next. Image number 7. Here's the daily KISS trend system for the S&P. Again, you can see it went long in March. It exited in early August. Nice winning trade. You could see all the smart trailing stops that are generated along the way. Protect those profits. The system did go long about just over a week ago. I didn't like that entry, quite honestly. It ended up being a whipsaw. It went long and it stopped out. Next. Image number 8. Here's the triple Qs this year. So on the KISS systems, you can see it actually took a long in January, got out in late February for a small winning trade. It then went back long again a couple weeks later in March, held it all the way till early August. Nice winning trade. So you had 2 winning trades there, and then the next trade ended up being a whipsaw small loser. It was able to raise its stop a couple times, but still a small loser. Now this is typical of these mean reversion systems. Unlike these trend following systems. Unlike the mean reversion systems of mine that are about 90% winning trades, these trend following systems maybe only have 50% winning trades or 60% or 70% on the high end. That means you have a lot of little whipsaws here and there, but you make up for that when you catch these big trends. Okay, you don't lose much on your losses, but you can make big money on your big trends. That's how these can only have 50-60% winning trades and still do extremely well. The beauty on these KISS trend systems is the very low drawdown versus buy and hold. Next. Image number 9, here's NVIDIA. So again, this is a great example of these, and I was discussing this about a week ago before the S&P and Q's KISS trend system stopped out. So you can see NVIDIA went long basically in January, made about 150% winning trade there. Heck of a trade, right? Was able to raise its stop about 30 times, smart trailing stop. It did go long again in mid-August and ended up taking a little loser there. But it's fine taking a little loser after that huge winner. That's the way these trend systems will do a lot of times. They'll catch a big winning trade and then you get a whipsaw. Then your next trade will be generally a bigger trade. So the good thing is here, because we had a whipsaw on this and some of the indexes, maybe the next trade has higher odds of being a winner. Next. Image number 10. Here's, this is from the website. This is our KISS trend following systems via these tables, the STS tables. And like I said, most of the daily and the indexes and most of the FANG big cap type stocks are in cash. So if you've been following those, you would generally be in cash. There's a couple left. It looks like Meta is still in a trade, and Tesla, and of course XLE Energy. But most things otherwise are in cash. Again, make sure you've set you've checkmarked the box here so that you can receive email notifications to your favorites. Okay, whenever you're on this section, you got to click the favorites button, which is the upper right, and you got to check mark a box for your email. Again, you have to be a subscriber. This isn't free, so if you're looking at this on YouTube, again, you need to be a subscriber to get trade email signals for these systems. Chart 11, here's Tesla KISS system. You can just see how this is done this year. You can see it took a nice winning trade back in, looks like February, March. Had a nice winning trade, got out, then it went back long again. I think this was May, June. Had a nice winning trade. Then it got back in, and you can see it's currently in with the current smart trailing stop of 236.40. Next, let me show you guys a few fun things. So over the weekend, I started working on some smaller time frames that I may eventually offer on the website that have fantastic returns. So here's a 78-minute version of the KISS system. 78 minutes charts. There's 5 bars in a day, and versus I use it on UPro versus SPY buy and hold. So SPY buy and hold, you can see the yearly gains, but of course you can see the massive drawdowns. 28% last year. 33% in 2020. Here's the 78-minute KISS trend system. And look at these crazy gains. 53% 2021, almost 140% 2020, 25% gain in 2022. Think about it. That's a long only versus the S&P lost 18%. 48.6% gain in 2018 versus a loss of 4.4% on buy and hold. Okay, so massive difference. You can see the number of trades per year on the 78-minute. On a daily chart, you're looking at anywhere from 3 to 5 trades. So I'm planning a custom section in the KISS trend section that I may offer a subscription to, where I'm going to have some of these custom, extremely high winning or custom KISS systems at. Next, image number 13. Here's another one, GDX. Here's a half day and a 78-minute. Now here's the thing about GDX buy and hold you guys may not have noticed or may not have known. So GDX, the gold miners index, is not something that you want to buy and hold for the longer term. Here's buy and hold on GDX, and look at this. Roughly half of the years are down years. Think about the general market. Usually 7, 8, or 9 out of 10 years are up years for the market. Bear markets are usually only, like I said, a quarter or 10%, 15% of the general long-term market uptrend. So GDX, half of the years have been down years. And look at the drawdowns. And I have 2 different drawdowns, one max drawdown from the highs that year and one just from January 1st, because you've been holding it all year. But look at these drawdowns, 48%, 28%, 49%, 30%, 41, 45, 57, 72% drawdown in 2008. Okay. Now look at the KISS system, average drawdown of 5.9%, again, versus the average of 25.7%. You can see the average annual gain for GDX. This, by the way, this should be GDX here, not Qs. Got a little typo. 5.8% down. 19% the KISS made. You can see how the KISS blew away buy and hold. And in the 78 minutes, even crazier. Look at the 78-minute GDX stats. Look at these gains. 1 year was down only versus over here where you had roughly half the years down. And look at these gains. Very impressive versus buy and hold. Average yearly gain, 25.4%. Quite a difference from minus 5.8% and or 5.8% and 41, 431, 432 total percent gain collectively versus 99%. So over 4 times more profitable in the long term. All right, guys, that does it for that. Now let's go ahead and move on to the general market analysis. So first chart below, item number 14. This is a yearly chart of the 5 key major indexes. Again, each candlestick is 1 year. Okay. Again, as you know, last year was a nice down year, bear market 2022. Here's the current stats this year so far after the correction we've had so far in August and September. Dow's up 2.5% for the year, S&P up 12.5%, NASDAQ still 35%, IWM small caps only 2%. And DBC, that's commodities up 2.5%. TLT bonds down 6%. So that's how the yearly is looking for the major index and some of the bonds. Image number 15, here's a monthly view of the major indexes with the Bollinger Bands. Again, so far we have 2 down months playing out with seasonality. Remember, coming into late July, we were looking for a correction in August and September, and that has been transpiring. Now we're still holding these little trend lines that we drew, but so far, seasonality playing out. Next, chart 16, another monthly chart. Looks like I got a duplicate here, so let's move on. All right, I had a duplicate chart in there, so I removed that. So moving on, here's a weekly chart of the 5 major index with the Bollinger Bands. Again, nice sell-off so far the last 2 months. So far, we have 3 waves down. You can see we breached the trend line in the Dow, the S&P. Again, we have a trend line down here in the low 4200s to mid 4200s. NASDAQ still holding that, etc. The Russell at the bottom, boy, still in this big old type of coil type pattern. Big sell-off from the top of that coil in July. This does not look too pretty. Next. Chart 18, here's a daily view of the major indexes. Again, short term, last 2 days were below the lower Bollinger Bands, a couple candles. So we are quite stretched here. You know, it's possible odds do favor some sort of oversold rally. But again, it doesn't mean you get it, but we are quite stretched here in the short term. Next, chart 19, here's the Dow daily chart. Again, we finally broke that uptrend line that we've had in place. And 200-day moving average would be your next area to watch. Next, let's move to the S&P 500 charts, do a top-down approach. So here's the monthly view of the S&P with the pivots. Again, we stalled perfectly at that R1 pivot there in July, as you can see, just perfect. So that's playing out, and of course with seasonality. Chart 21, here's an interesting chart. It's a S&P chart. It's a Renko chart. Each box size is 30 points. Very clean chart, but look how great this shows you support and resistance. So this area up here, just above 4,500, you could see was resistance in July. It was resistance in March, April 2022. And it was a resistance in 2021, so it was an important level. Now this area in the low 4200s, you could see that was resistant or support back in early 2022, became resistance. We broke it, so it's now support. This is an area of support to watch. Next, moving to the standard weekly charts. Here's a weekly view of the S&P. Again, in late July, we rallied all the way to the top of this channel, the top of this resistance. We had RSI divergence, seasonality, everything lined up for a sell-off here. So far, we've got a three-wave pullback. Could be an ABC, could be something more bearish. If it's simply a fourth wave, then we're looking for something like this green, maybe test this channel, then rally up again for an end-of-year rally. One thing, this RSI trend line broke. That's a negative here. The more bearish view would be that we put in a major top up here and we're going to break the channel and go down like you see in red. Next, chart 23, here's another weekly view. Just shows you the same thing, obviously. Again, this is either an A, B, and then we're working on a C, or it's a more bearish 1, 2, 3. This is your demand zone. We'll see if we find some support here or this channel line. Next, chart 24, here's another weekly chart. Again, shows you essentially the same things. The channel up there where we stalled at. We pulled back last week all the way to this big level here, 4,300. This is an important level. It was resistance, 2022, twice. Then we broke it, so it's now support. If that doesn't hold, your next big support area is right here and this channel. Also, take a look at this cycle indicator. This is fairly rudimentary, but it's been pretty good about, picking these little highs and lows, as you can see. And just like it wasn't perfect, but it projected a high sometime in July, and now it's projecting a low sometime in mid-September. So we'll see if that plays out, or later September. So next, moving on to the daily chart. So here's chart 25, daily chart of the S&P. You can see the clean channel. Remember, we stalled at the top of the channel there in late July. Was an area to take profits, especially the seasonality coming. Sold off. Again, same wave counts apply. This is either a wave A, B, C, or a more bearish 1, 2, 3. This is a demand zone, which we're getting into. We'll see if we can find some support in here. One measurement, if this is a wave C, were to equal wave A, the initial down move, you'd have a target of about 42.69. Now, notice here you got an open gap from early June. This is an important area. It's a breakaway gap. Honestly, for the bullish case, wave 4 pullback ABC, really best to hold this open gap, or get a little Pinocchio move, but not too much below that. Getting below there starts, giving a lot more credence to the bear case with a major top being put in. Okay, obviously you have the 200-day moving average down there below. So onus is on the bulls, guys. Chart 26, another daily view, just zoomed out a bit. Again, you can see how we stalled at the top of the channel. We were talking about these coils last week. We broke down last week from the coils. That was an area to exit longs or take a short, quite honestly. We've sold off to this big area. You can see, again, this was resistance twice in 2022. So we broke it June, it became support. So this is an important area. We're right here. We'll see if we can bounce here. If not, then I would be looking for this channel. But as I say here, below this area starts putting things in jeopardy if you start breaking this channel. Chart 27, another daily view, shows you the same stuff. Again, like here, bulls need to hold this area, like I said. Otherwise, look for lower prices, more bearish over time. Next, chart 28, here's the wave counts that we've been showing. Again, it's either a wave 4 that we're in, and like I said, if it's a wave 4, you really want to hold this point of recognition that I just talked about above on those dailies with that gap. You really need to hold that. Again, you can still go below it, but it starts weakening the case for the wave 4 where you get a wave 5 up. The bearish case is, we've had a 1, 2, and we're working on a wave 3 down. Eventually we'll sell off more, then we'll eventually have a wave 4 bounce, but this would put a major top, wave C, in place. So given the fundamental backdrop of everything, I wouldn't be surprised at that, quite honestly. But, let's hope the bulls can do some sort of wave 4 here, end of year rally, but we'll see. Chart 29, here's those 4 time frames we like to follow with our custom indicators, the daily. Again, we broke the ATR on all these time frames. On the daily, we do have a little support cycle there, 1 dot on Friday, so we'll see if we bounce from that or not. Certainly price sold off from the resistance cycle. And the only thing I'll say, again, short term, we're quite oversold. Look at the moving average ribbons. I talk about the ribbons when they get too expanded. Look for reversion to mean type stuff. But clearly the ATR is resistance in all these time frames. Chart 30, here's half-day chart of the S&P. Again, shows you the channel here. We broke down from the coil last week. Again, the next target could be this 61.8 fib, 4260, bottom of this channel. And remember, you have that open gap there in early June, which I don't have marked here, but you can see it. Chart 31, here's the 60-minute chart showing that coil that we were discussing last week, which we stalled at the top of the coil. That was a good area to short. And of course, we broke the coil later in the week. Chart 32, here's a 30-minute chart. Again, it's either A, B, C down or something more bearish. Okay. Again, we broke the coil trend line last week. Moving on to the triple Qs, chart 33. Here's the triple Qs monthly chart, down 5.2% for the month. So nice down 2 months here with seasonality. Next. Chart 34, here's the weekly view of the triple Qs, down 3.5% last week. This is a demand zone. We bounced off it last time. We're back into it. And here's some fibs to monitor. Chart 35, here's the Qs short-term daily. Remember we talked about these coils. Price broke the coils to the downside last week, as you can see. Okay. Now, if price were to bounce here, or first off, notice this would be a 1-to-1 symmetry, would measure down to just below the 350 area. Maybe it's possible we could see a bounce here and then fail, come down again. This would be the more bullish case, wave 4. But again, unless we rally really strongly from here, I don't favor that. Chart 36, here's another daily chart. Shows you symmetry. Largest pullback since the Qs bottomed was 36.3 points. We haven't broken symmetry, long-term symmetry. All pullbacks have been less than that. On a perfect symmetry pullback, you'd have a target right here at 350, 165. Otherwise, breaking that, this would be your next demand zone down here, conveniently near the 200-day moving average. Remember, the 200-day moving average would come up over time and get into that box. Chart 37, here's a half-day chart. Again, closed right in this area, support. We got a demand zone here. Now, if this doesn't hold, your next demand zone is there's an open gap down here. It could be a target. Someone asked me, could this be a slanted head and shoulder pattern? You can kind of see it. But again, you can see we broke that coil to the downside last week. The onus is on the bulls here, guys, if we can bounce this or not. Chart 38, here's a 2-hour view. Another area to watch would be this lower trend line here. Could be a magnet. Chart 39, here's the 4 time frames that we like to follow. Again, very similar to look to the S&P. You have a support cycle here on Friday. We're quite stretched oversold on these lower time frames. The moving average ribbons are pretty wide. Chart 40, here's Apple, Crapple. Again, Apple, as you know, had a bearish symmetry break there in early August. So on that initial sell-off, wave A, we were looking for a lower high, wave B pullback. Hope some of you guys shorted that. That was a great short. It's come down. It hasn't taken out the lows of wave A there. But this does look precarious to me. The mark, I wouldn't be surprised to see this at least test the 200-day moving average in wave C. Remember, Apple is really the biggest component on these indexes. What Apple does, if Apple has a 3% move down one day, you probably have to have 1,000 other stocks go up to counteract that. The weighting is that strong. Chart 41, here's a monthly view of Apple. I like to just show this for perspective. You can see the long-term uptrend. This is a logarithmic chart, so I can draw a trend line. But look at this huge MACD divergence on the monthly. That MACD is nowhere close to the previous peak. This could be setting up to a multi-year top on Apple, perhaps. So be aware of that, guys. Chart 42, Amazon. The KISS system was long this nicely. It exited for a nice winning trade, and you can see, it's lost your big support. Chart 43, here's Amazon on the KISS system. Chart 44, here's IWM small caps down 3.8% for the week. Again, IWM simply been ping-ponging between the trend lines of this coil, rallied off of it in April, May, all the way to the top of the coil. Hope you sold. Honestly, it looks like it's going to test the bottom of this coil or break it eventually. This does not look good, guys. Chart 45, here's another daily view. Again, you can see we had 5 waves up going into late July. Everything lined up there, being at resistance, 5 waves up for a pullback seasonality. And again, you can see a possible little head and shoulder here as well, slanted head and shoulder. Chart 46, another daily chart again, this potential head and shoulder pattern I've been showing. You can see potentially playing out now. Finally, chart 47, here's TZA, that's the triple inverse ETF. IWM, again, you can see the potential inverse head and shoulder pattern. I posted this about a week ago. You can see playing out nicely. There's an open gap here, which looks like an immediate magnet in the short term. So there you go on the indexes, guys. The onus is on the bulls. Let's move on, look at some indicators. Chart 48, here's the VIX. So the VIX, as you know, has been building this base for the last couple months, rallied off this base once again. It's still outside its Bollinger Bands. It was below a little bit on Friday, closed back inside. So no VIX Bollinger Band buy signal yet. Next, chart 49, here's the VIX and the VVIX. That's the volatility of the VIX. Now the VVIX did close below its upper Bollinger Band, unlike the VIX. So that does give some hope of a bounce here in the short term. Sometimes it gives an earlier signal one day than the VIX, but we'll see. Chart 50, here's a 60-minute chart of the VIX. Again, you can see heck of a rally from this trend line break. And quite honestly, still looks pretty good here, kind of like a flag. Chart 51, here's a weekly chart of the VIX. If you really wanted to get a real good, gut-wrenching sell-off in the market, this is basically at long-term support, as you can see. Next. Let's look at some of these useful indicators. Chart 52, here's the NYSI system with the 9 EMA, and you can see how great the buy and sell signals have been. They're not going to catch tops and bottoms, but it'll maybe catch 80% of the trend. Gave an excellent sell signal there in August, early August, as you can see. And even on that good bounce you had in mid-August to late August, it did not give a buy signal, got close. So it's kept you out of harm's way. Chart 53, here's the weekly NYSI system. Again, you get your trigger by breaking over the high of the NYSE candle. So now we got to get a move over the high of last week's candle. But you can see buy and sell signals have been pretty good on this for more like a trending environment. So another good indicator to keep in your trading toolbox. Chart 54, here's the S&P versus the BPS-PX. Remember, the BPS was leading down, making a lower high. I warned about this over a week ago, and lo and behold, it played out and pulled the market down. Remember, this tends to lead. This was a warning. Now, we also have this as a system, BPS-PX, via the crosses of these moving averages. Got an excellent sell signal there in early August, but clearly not even close to a buy signal yet. A buy signal, the BPS-PX needs to cross over these two moving averages. Obviously not even close to happening. A short-term positive in the market, I'll say, is this is a 60-minute chart. S&P versus high-yield corporate. Market tends to follow high-yield corporate. And you can see at the moment there's a slight higher high in high-yield corporate here. But again, this is a 60-minute chart. This could easily be negated, but it is something to be aware of. Short term, like I said, we're quite oversold. Here's the S&P versus the S&P Advanced Decline. You can see it's below its lower Bollinger Bands. Whenever it gets below its lower Bollinger Bands, you tend to be close to a bounce. Again, so chart 58, here's the S&P with the highs and lows. And again, you can see the highs minus the lows, but below the lower Bollinger Bands twice. two bars, and the highs or the lows have been above the upper Bollinger Bands. And you can see again, if you just compare the chart, you tend to get bounce attempts whenever these get like this. Chart 49 or 59, here's the NAHL, NASDAQ new highs minus new lows. And guys, this is a best illustration of just how narrow the market rally has been this year. Okay, so look at this. The market bottomed in 2022. We had a heck of a rally this year, especially in the Qs. Well, look at what this did. And this is the NASDAQ highs minus lows. This indicator didn't even budge. It still is trending down. Again, that's because we have 5 stocks that are causing the majority of the gains in the market. I've never seen a market more narrow than this. It's not good for the longer term. All right, let's move on to bonds. Here's high yield corporate, still hanging on to some support here. Remember the 60-minute chart I showed you above. Chart of 61, there's the weekly. Then something to watch, especially if this breaks this pattern to the downside, that wouldn't be good. Chart 62, TLT 20-year bonds continues moving down, made a new low last week. Now we do have some MACD divergence potential now. You know, if this were to rally, that would cause a pullback in rates. I think that would be a catalyst for the market to bounce, get an oversold rally, but we'll see. Onus is on the bulls there, or bond traders. Here's the monthly chart of TLT. My concern is the next demand zone is all the way down here, you know, around 80. And this would cause a convenient 5th wave move. You can clearly see the 5 waves. You know, if that were to occur, I think the market would have a stronger sell-off here before putting in a low. Chart of 64, there's the weekly version of the 10-year Treasury yield. Again, briefly broke to a new high last week. Market doesn't like that. Chart 65, there's the daily. Again, remember we've been stating that this looked bullish, kind of a cup and handle. Broke out last week. Pulling back some on Friday, but that didn't help the market much on Friday. And let's go ahead and move on to look at some of these sectors. See how things look under the surface. So here's XLK Technology. It looks similar to the triple Qs. You got a potential little rounded top here, umbrella top. You got a support here. If this loses this, I could see a quick move down to this demand zone down here near the 200-day moving average. Not a good looking pattern, guys. Moving averages have flattened out. That's where you're more vulnerable to a stronger sell-off. Chart 67, here's the transports. Remember that we showed this rising wedge. We said our target was at least the 200-day moving average. Well, that was hit on Friday. Chart 68, XLF Financials broke this flag to the downside, testing the 200-day moving average. Here would be a 1-to-1 symmetry target. Chart 69, Materials, also leaking oil, well below its 200-day moving average now. If you want to see a really weak sector, here's XBI Health or Biotech. That's also huge on the Russell, but look at this sell-off. Now, potential little double bottom there, but boy, looks ugly. Let's look at real estate. Here's IYR. Look how strongly that rising wedge has played out. This looks bad. Chart 72, here's the weekly chart. You can see breaking this weekly trend line. Does not look pretty. Again, we all know the problems that real estate is facing with 8% mortgage rates. Eventually something's going to break there, guys. I know supply is low, but what's going to happen when the economy starts going bad? I don't foresee a soft landing, guys. I see something worse inevitable, and then I think the housing market will then take the brunt. Chart 73, XLI Industrials, testing the 200-day moving average. Chart 74, Healthcare, more just more chopping down, more orderly move down near a trend line here now. It is below the 200-day moving average. Chart 75, Home Builders, also broke this pattern to the downside last week. 200-day moving average could be a target over time. Chart 76, Retail, kind of had been shown this little slanted head and shoulder type pattern. Remember, broke the neckline early last week. Not looking good. As you know, there's a lot of what they call shrinkage there and all this theft. Moving on to energy, finally leaking oil here. XLE down, lost its 20-day moving average last week. Could be on path for its 50-day moving average. Remember, stocks were very overbought there. Talked about that with the bullish percent energy index. Charber 78, oil services breaking a little rising wedge to the downside. See the MACD divergence that was building. Charber 79, here's the bullish percent energy index. Remember, I've been cautious on energy stocks here because this was at 96%. Finally let loose last week, given a sell signal. The buy signal was that you wanted to take was back here in May, June when this was oversold. The time to buy energy stocks was not a week or two ago when this was elevated. But it's now on a sell signal. Charber 80, here's ERY. That's a way to play a pullback in XLE. You can see it broke the channel. Potential fifth wave move down. Next. Moving on to commodities. Charber 81, here's DBC. Again, this has been a very strong area. Broke out of the wedge in July. Back tested the 200-day moving average. It's pulling back a little bit. Still looks okay. Charber 82, there's the monthly view. Again, I like this longer term, potential big ABC pullback. I wouldn't be surprised if this eventually takes out the highs. Again, this is the bigger picture look. Charber 83, crude oil. Still holding on here. Again, as you know, Saudi Arabia, Putin, everything are doing what they can to hold up crude oil. Biden administration, quite honestly, has really screwed everything up. A lot of incompetence there. I don't want to get into it, but still holding up here, but is quite overbought. Charber 84, here's SCO. It's a little way to play a pullback in crude oil. You have some active divergence here building. Still hasn't been able to cross above its 9 EMA. Charber 85, natural gas. Had a pretty good bounce last week. Really not a lot to say. It's really just been a lot of chop, quite honestly, for months. Charber 86, copper. This is the weekly chart, down 2 3/4% for the week. Still hanging on to this coil for now, but looks a little precarious. One commodity that's really been strong is uranium, URA. Looks like it's forming a bull flag again. Look at that volume patterns. And look at the monthly chart of URA. Broke out of this multi-year coil. Looks great. I think this could eventually go up to the upper 30s over time. Next, here's Bitcoin. Still more just chopping around sideways. Charber 90, Riot, one of the Bitcoin type stocks, broke down last week. We had this as a short. Next, Charber 91, US dollar, just continues to move up. It's now into this next supply zone. We'll see if it can reverse there or not, but the dollar has been super strong. Charber 92. I thought I had a weekly chart of the dollar here. I must have removed it, but let's go ahead and move on. Here's the Japanese yen. I'm still monitoring this potential wedge, but the one issue here is it's moved all the way to the apex of the wedge, and a lot of times when that happens, these wedges kind of fizzle out, but you still do have a MACD divergence here. Charber 93, here's FXY. That's the ETF, same pattern, obviously. Moving to precious metals, Charber 94, here's gold. So gold rallied near the 200-day moving average recently, twice, stalled at the downtrend line, pulling back. Still holding the 200-day moving average, but the concern here is the ratio. This is the GDX-GLD ratio. It's leading down. Again, this needs to lead up, guys. If it doesn't, then we could see gold break down again. But otherwise, gold has really held up fairly well since the early May highs. I mean, it's down, 140 points. That's not bad. Charber. Next, Charber 95. Here's a weekly chart of gold. Again, one thing we're going to watch, guys. We got to watch this ratio. Remember, we need the stocks to lead. It's not leading. You're in this coil. We'll see which way this breaks. Charber 96. Here's the weekly dollar chart. I went ahead and added it to the newsletter. Like I said, the dollar rallied off this demand zone, rallied off the 200-week moving average. Everything was set up there. The thing, guys, is this bounce is the largest rally since the top in 2022. This is a break in symmetry and a break in structure because you took out this last lower high. This tells me that the dollar, if it pulls back here, it'll likely form a higher low. So just keep that in mind over time. Moving on to silver. Here's silver in the daily. It's been just chopping around within this pattern. Quite honestly, the best way to look at silver is this weekly chart. It's really just a weekly coil. It's really energy's building here. Trevor at 99, here's GDX weekly version, down 2.86%. Trevor 100 GDX on the daily, again stalled right at the near the downtrend channel. Again, your bearish views, you simply just had an ABC. That's it. Onus is on the gold bugs here. You can also watch this ratio on this trend line on the RSI. Trevor 101, here's GDX daily with the ratio, and you can see we broke that. So again, the bearish view would simply be we had an ABC bounce only, going to go back down to a low. Onus is on the bulls here, guys. Trevor 102, here's a 60-minute chart with some fibs. We're right at the 61.8 fib. Trevor 103, here's BPGDM. Now this did give a buy signal last week. Remember, BPGDM, just like the BP&ER, it's normalized from 0 to 100%. So when it's up in these levels, you're overbought. That was a good exit sell signal in April. So this isn't a horrible buy signal down here, but it remains to be seen if we make another low or not. But this did come down below 15%. Looking at just a few individual names in this sector, here's Newmont. This is the largest component of GDX, so you always got to follow it. It did rally off the lower wedge trend line that we were showing. It's back to the top of the wedge resistance. Trevor 105, FVN is another big one. This isn't doing much, quite honestly. Trevor 106, NG, Nova Gold had a double bottom rally. And finally, Trevor 107, SVM, silver type stock, broke out of a wedge. It's still hanging here, but if you're long this, you need to have a stop in place. Still looks okay otherwise. Let's follow up with some recent ideas. I didn't add any new ideas here, guys. So here's ACHR. This has been on the watch list. It broke down for a short last week, as you can see. Trevor 109, CRS was a long that actually played out despite the market pulling back. Another short that we had, XLRE, you could see this was on the watch list for a couple weeks, broke down hard last week below that trend line. The weekly really puts it into perspective. Look at that weekly trend line break. This could go down quite a bit more. Alcoa, had a bounce off support here, but if it loses this area, it could be a short. Some other shorts that we had, PHM, they all still look fine. KB Homes, PLTR, again, 200-day moving average could be targets on a lot of these. And LPX broke this support. This would be your next support down here, 52. And that's it. Anyway, guys, futures will be opening shortly. We'll see where they open at. And that'll do it. Have a wonderful rest of your Sunday. And if you haven't subscribed to Breakpoint Trades, you're looking at YouTube, consider subscribing. We're $50 a month. That's not very much, guys. You probably spend more money per month at Starbucks on $7 lattes. Think about it. All right. Have a wonderful rest of your evening. Take care.